Yo, what's going on, guys? In this video, I want to go over the two-stage delivery bias. Now, a lot of you guys in the live chat, not only this week, but even in weeks past, you guys have been asking me, why is it that it seems like I always have a much more confident bias and draw on liquidity when we have high impact news. So a lot of you guys that have been following me for a little bit know that I love trading CPI days. I love trading PPI. I love trading NFP Friday. I love trading FOMC. Obviously, after those news events pass, right? I'm not ever advocating that anybody trades during the actual news event, right? I think that should go without saying. I think you're gambling if you do try to do that. But I really like trading on these days. And I'll tell you guys why here and show you guys with some examples from this week because it actually played out both times this week. So let's actually, here on the NQ chart, let me just go ahead and clear all these drawings off the chart here. And let's just go ahead and jump to a little higher time frame. And I'm going to show you guys the CPI day and PPI days because that's what we just traded this week. And the bias rang true both of these days. So here we have Wednesday, so CPI day. I'm going to jump into replay mode here as well, and let me just go back to 8:30. So 8:30 news when the actual news candle released and created the CPI candle. So when we fast forward here, just one candle. So on the 15-minute chart, this is what it looks like. Boom, we create this 15-minute down close candle, and you guys can see obviously it's a very aggressive, volatile move as it always is for any of these high impact news drivers at 8:30 New York time. And basically the time frame that I'm really looking to trade is going to obviously be after opening bell, getting into silver bullet hour. So if I were to put vertical lines just on kind of that window here, so from 9:30 and really sometimes not even until 10 a.m. New York time, but really like anywhere from like 9:30 to about 11 a.m. New York or so is generally the window in which I'm actually looking to execute and capitalize on. So letting the volatility from the news play out, right? So if we just go ahead and play this out a little bit more, we see that price does what, right? So we have data high right here and we have data low, which really is just a cool and fancy way of saying the candle or the news data came out. Obviously you have a high of that candle and then you have a low of that candle, and it's a big range, right? So if we were to just measure this range, you're looking at over 100-point range just in one 15-minute, and then even in this case a 5-minute candle. So generally my bias coming into these days is obviously waiting for price to move, right, and shake out that volatility as we get into market open. That is when we can actually start looking for the move. But the go-to bias is so simple, guys. It's just two-stage delivery. Now, I'm not going to sit here and say that this will play out 100% of the time, all the time, because that's just not true. Nothing in trading is 100% accurate, and nothing is going to give you a 100% win rate. So I do not want you guys to take this and just say, oh, this is what's going to happen every single time, because there's going to be probably some times throughout the course of a year, right? There's 12 CPIs every year, one a month, FOMC, PPI, NFP, right? So it's not going to happen 100% of the time, all the time, every single month. But majority of the time, and you can back test this yourself, this is how it's going to play out, right? So the go-to bias is once price prints the data high and the data low, what you'll usually see is that price will then go and take out one of the extremes, either the high or the low, going into market open. And then after market open, you can wait for a bearish PD array in order to then go target the other extreme. Really, really simple. So if I drop down here to a 1-minute time frame chart, you guys can see that price, right, as we get into market open right here at 9:30 New York, price has a big candle down, but we leave behind this inefficiency. We already see that price is starting to reverse, going back toward the data low or the opposite extreme, right? And then if you were to compare this with ES, there was also an SMT divergence at the high. So these are all things that you can use to know when to time it out, right? Like know when the reversal should and could be taking place. Again, you're not going to know 100%, but it's these clues that you can gather that will help you figure out when that is actually going to be taking place. So right here, price taps into a bearish fair value gap. And if you guys go to the my Wednesday stream, or just go back to that stream where I'm talking about bias. This really was your best possible entry for the shorts down to data low. But that was really the bias going into that session from start to finish, was we took out data high, and now I just want to see data low get taken out, right? So as price sells off here, you can find that there were multiple entries that you could have taken if your bias was this way. And you can see that price ultimately, even though it does chop around in the middle here quite a bit, we finally do trade into data low and then some, guys. So this was CPI day. Let me go ahead and delete these drawings, and let's go ahead and also skip ahead here to the PPI day, and I'll show you guys what happened the Thursday to follow, right? So let's get into replay mode once more at the 8:30 news candle right here for Thursday. So let's jump into here. Let's full screen this bad boy, and let's drop back down here to the 5-minute chart. Let's get the news candle passing. So here we go, guys. Here you see that news comes out and price does what, right? We put in an extreme, put in a high, and then we also put in a low, right? So price puts the data high in. You can mark this out as your data low as well if you want to. You can even jump up a time frame. This is the 5-minute chart, so you could jump up a time frame, and you could even mark the 15-minute candle high and the low. But it'll put in a very distinct high and low for the actual data release, right? So let's get ahead into market open. 9:30, boom, mark that out. And obviously for me, I'm always wanting to see market open before I even look to do anything, right? So here we go. Market opens up at 9:30. We do one more drive lower, doing what? Taking out the data low. So price runs and it takes out the data low, and we push aggressively here in the first few moments of the opening bell volatility. And then as we actually get into the macro, which I'll make a updated video on time macros a little bit later in the week, because a lot of people have been asking for it, but we make a drive down lower inside of that macro, and then ultimately price does what? We trade up to the data high. So again, a two-stage delivery event. PPI, CPI, both did it this week, where they take out the one extreme of the range. In this case, it was the data low, and then price reverses and goes and takes out the data high. For CPI, it was vice versa. It took out the high first, and then we reversed at the beginning of silver bullet hour to go take out the data low. So this is just a go-to easy bias to look for on these high impact news days. Again, the entry is going to look different every single time that you're trading any given day, because market is unique day to day and week to week and month to month. So again, nothing is 100%, but it is something that's going to give you a really easy bias. You're going to be able to frame the draw and liquidity that much easier, and not be going back and forth as much on where you think price might be going or wanting to go and target, guys. So hopefully this video was helpful. Let me know if you guys have any questions in the comments down below. Got more videos coming later this week. And by the way, this is something that you guys can use for this upcoming week, because we have FOMC on Wednesday of this week. So on a FOMC event, it's always in the afternoon, obviously, right? So instead of your CPIs and PPIs and NFPs being at 8:30 in the morning, now you have the same thing happening Wednesday in the afternoon. So I treat FOMC the exact same way. I wait for that huge volatility spike to come in from the actual statement release. And then once the data high and or low is taken, I'm just waiting and being patient, trying to find that two-stage delivery. I'll admit it's a little bit different just because it's a PM session, economic event, but ultimately it still will deliver usually the same exact way in that two-stage delivery, guys. So hopefully this is helpful. Let me know if you guys have any questions. Leave a like on the video. You guys know all that good stuff, and I will see you guys in the next one. Peace out, everybody.